So whenever I talk about Bitcoin as a serious retirement asset, there's two things you've got to think about here, right? So number one, from a buy and hold strategy, it's fine if you got a lot of capital, but if you don't have a lot of capital, it's not great, because Bitcoin at 100k, if it goes to 1 million, it's 10x, which is great. If we get a drop down to mid 50s, that's fine, because that's suddenly becomes an 18 to 20x, which is great as a retirement asset. But it's not going to do that for the next 10 years. The compound annual growth rate is fantastic for the last 5 years, but we have diminishing returns to think about. So 40%, 30, 35%, 30%, 2025. Eventually those returns will get less and less and less. So the second thing to think about is so first thing, buy and hold strategy, it's okay, but from a rotational strategy, far better. So for example, today Bitcoin has crashed 40% down from its all-time highs of October, which was $126,000. We're now roughly 60 to 62 to 65, with expected further downside and volatility. So here's the kicker: for me to make a meaningful return on my $10,000, i.e. for me to turn my $10,000 into $1 million retirement portfolio in Bitcoin, I need this volatility. I need these drawdowns. I need the price appreciation on the way up, but I also need the drawdowns too, so I can compound my profits. Now, currently at 40% down, when the price goes up, that'll be a meaningful price appreciation. Now, we might not even be at the bottom of the drawdown. We are in a bear market now, right? We've gone under the 50-week moving average. The next touch is a 200-week moving average, and it is my belief we'll hit that, but I don't make price predictions. Please ignore my predictions. I'll wait for the market to show favorable conditions that suggest we're going to get an appreciation in price. That's what I'll be waiting for. But when I see a 40% drawdown, I'm pleased. When I see a 60% drawdown, I'm pleased. When I see an 80% drawdown, I'm incredibly pleased. The reality is these drawdowns happen when there is structural risk, when there is fragility in the market. When there is fragility in the market, I'm out. I'm already out the market. I'm out way before drawdowns. Now, there's always a risk to that. The asset I hold might not appreciate at the rate that most crypto guys would expect. They're expecting 10s, 20s, 100s, etc., etc. If you're going to use Bitcoin as a serious retirement asset, that's not a number I want to be going for. My goal is not numbers. My goal is to enter the market when price appreciation supports it. The reality is drawdowns like this are necessary for me to hit my retirement goals, for me to remain consistent. The change in market conditions are what makes my strategy. The volatility is what brings my strategy for life. And I'm not going to lie, guys, on days like today, it gives me a great big pat on the back that I'm doing the right thing and I'm making the right moves. I've now been at this for 3 years. If you go to my Substack, you'll see that I turned $1,500 into $10,000. It's not about hype. It's not about predictions. Every move I make, every trade I make is documented in real time. It's a real money Bitcoin portfolio. If you want to follow that journey and see what I do, and maybe take a portion of your Bitcoin portfolio to try and match me and beat buy and hold, please visit my Substack. Otherwise, subscribe to my YouTube channel, follow my journey, laugh at me if I fall flat on my face, or pat me on the back when I do well, because I love it.